Good morning. Welcome back to another edition of Pre-Market PulseScan with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports that we place in your hands each and every trading day. Hopefully, everyone had a really good night's sleep and you're ready to come back and bang it out today. Today, the itinerary is full. We got a lot going on. Yes, we do. We got initial jobless claims that came out at 8:30. We got um, GDP revisions. We got corporate profits. We got virtual Jackson Hole at 9:10. And then we got pending home sales at 10. So 10 minutes after 9, Jackson Hole, 10 o'clock, pending home sales, man. And then, of course, tomorrow is the real big day. Take Back Friday. You got the virtual Jackson Hole conference continuing. You got personal income, consumer spending, core inflation, advanced trades and goods, Chicago PMI, and consumer sentiment index. So tomorrow is an even bigger day than today. But the initial jobless claims was kind of whack, but it was expected. And the market is pretty much muted this morning, folks. It's like going nowhere. It's like stuck in first gear. We're not going anywhere. So I think the market is really, no one wants to jump in front of all the things that are happening, especially with the Jackson Hole. So here's how the overnight markets are coming into focus right now. We got, first and foremost, your Dow futures down 29 points at 28,284. You got the nasty NASDAQ 100 down 37 and a half, make that 40 points now at 11,950 and a quarter. You got the E-mini S&P 500 down 8 points at 3472 and a quarter. The Russell My Hustle is off only 8 ticks, basically, trading at 1561.8. And you got the mighty Bitcoin futures composite index down $75 at 11,405. Then you got the nat gas is up 4 cents at 261. You got your crude oil futures off 22 cents at $43.17 a barrel. You got the long bond trading at 177.03, up 19.30 seconds. You got gold futures up make that $6 now at $1,959 an ounce, and silver is up 22 cents at $27.82 per ounce. Again, not a lot of movement. You got the U.S. dollar index down 20 pips. Yep, trading at the 92 handle. We're at 92.80. The euro dollar is up 27 pips at 118.47. Pound sterling up 37 pips at 132.30. You got your Aussie up 39 pips at 72.68. Canadian is off 15 pips at 131.32. And the euro yen is up 18 pips at 125.49. Dollar yen down 9 pips at 105.90. Kiwi is up 23 pips at 66.44. Beans on fire, up 10 3/4 points, trading at 9.35. And you got corn up 3 at 3.57 1/4, and wheat up 5 at 5.44 3/4. So we do got something going on, and that's in the grain market. Grains are doing what they do. Let's see here. What else we got going on? Give me just a quick second. Let me access some stuff here, see what's going on. I know there's something somewhere. I just have to find it. Okay. Not there. Where was it? I seen it. Let's see. Let's see. Okay. Jeff Bezos is now the first person in history to be worth more than $200 billion. Wow. $200 billion. Good grief. Must be nice to be worth $200 billion. That is a lot of money. His posterity will not have to work for generations, multiple generations. They will not have to work. All right, so with all of that, you got Jeff Bezos breaking the $200 billion barrier. What else is new? What else is going on the back of that? Well, we had record GDP plunging, and it was revised slightly higher, but the economy still contracted 31.7% in Q2. That you can't get away from. Those are facts, and those aren't going anywhere anytime soon. So here is some interesting things that are going on right now. And as you know, this is really nothing new, but we got to think about where things are headed and why you're seeing what you're seeing. And one of those things is you have a SEC-backed crypto exchange launching with 130 million security token offerings. The INX Trading Solutions, a new crypto exchange that's hoping to displace its competition via close relationships with regulators and more robust technology offerings. Okay. Basically, they're saying we built our own technology. We don't license it. The company boasted in a release, has just launched one of the first SEC-approved security token offerings in the United States. The company has attracted the attention of the financial press thanks to a hilarious chart. And I must tell you, this is the same government, the SEC, same government that said crypto is not a currency, crypto is not a security, and that it was nothing but a criminal organization, and you should stay away from it. It's a threat to national security. So while they were saying that, they were actually planning to roll out their own. And that's pretty much what we see going on right here. All right. So when asked what's really going on, what's really good, you know how people are. They talk around in circles and loops. It's not an equity offering. It's not an ICO. It's just them building out their own blockchain, their own exchange. Like I told you, that was going to happen. All right. Not decentralized, but centralized. So the whole idea behind the blockchain technology, freeing the people, decoupling from the central banks, now they bringing you right back around to the central banks. And they're going to make it extremely attractive. You're going to have all the order types and stuff like you do for equities and futures and forex. I told you that was coming. I warned you in 2016 that was going to happen, and everybody told me that I didn't know what I was talking about. Straight up. And think about it. Yeah, I see you in the live chat. Yeah, it has a lot to do with Reggie Miller's Veritasium. Why do you think they shut him down? They didn't want him controlling it and competing against them. They had to shut him down. He was moving too fast and getting too big. He would have been in their way. So they had to shut it down. Yeah. So some people believe that the project, which is coming to market just as Bitcoin and all the top altcoin prices have been moving higher, has some built-in advantages that differentiate the INX from the ill-fated scam level ICOs of yesteryear. Now, INX has built its own exchange platform and forged a working relationship with the SEC that could give it an advantage since American regulators hold the keys to the crypto asset kingdom. That's right. Yes, they do. That's what they said. Now we're going to control this and regulate this. Now, traditionally, exchanges have been among the most profitable businesses in the crypto ecosystem. All right. But now The company is offering up to 130 million INX security tokens in the offering on Tuesday. Now, INX Limited today announced that the Securities and Exchange Commission, the SEC, has declared as effective its registration statement on Form F1 filed in connection with the initial public offering, the offering of up to 130 million INX security tokens. INX has set the offering price at 90 cents per token with the minimum investment of $1,000. It is anticipated that the offering will begin on August the 25th at 2020, 10 a.m. Eastern Daylight Time. INX intends to use a portion of the net proceeds raised from the sale of INX tokens and the offering for the continued development and operation of INX Trading Solutions, a regulated solution for the trading of blockchain assets, including cryptocurrencies, security tokens, and their derivatives, and for the establishment of a cash reserve fund. A registration statement related to these securities was declared effective by the SEC on August the 20th, and copies of the registration statement can be accessed by visiting the SEC website at sec.gov. And the offering is being made only by means of a prospectus. A final prospectus describing the terms of the offering has been filed with the SEC and forms a part of the effective registration statement, blah, blah, blah. Everything that Reggie was doing, they shut down and said, no, we want to do it. We're not going to let you do it. I'm just telling you, now the SEC ain't going to use Verity. They shut them down. They're not going to let them come back after shutting them down. No, not like that. Remember, the government does not allow competition with itself. They want to control and regulate everything. So if there's something that they can't control and regulate, they're not having that. Can't have that. I warned you guys that this was coming. I told y'all back in 2016 that this was coming. And now it's here. All right. We got mad new exchanges coming up. Exchanges, man. The government, I told you they were going to build out their own blockchain. I told you they were going to come with their own exchange. And even going to regulate all the other non-centralized exchanges out of existence. They'll just make their new platform so attractive that people will flock to it. Even all those purists who said, no, we're gonna stay with what we like, what we do over here. You know, I'm telling you, they're gonna make it difficult. People are gonna come to the new thing, trust and believe that it's just what it is. But they're gonna say, look at the exchanges that you use now. They don't even offer you all these services that we offer. Look what we offer. Look what we got over here. We got all of this. Why you want to go over there? You ain't got to go nowhere. We got you. Of course, that's how they're gonna move. You already know this. They're going to say, look, you can use stop orders of us. You can use good till cancel orders of us. You can place your stop now at the same time you place your buy or sell ticket. You can sell short with us very easy. Yeah, see, we're going to treat it like futures. Yeah, man. We have all the advantages over here. Oh, by the way, we didn't tell you. We also have a viable crypto options market. You can buy calls and puts now. Wait, I'm telling you, they're going to have the slickest looking platforms. They're going to have it all ready right there for you. You'll be able to trade crypto in your account at TD Ameritrade, Interactive Brokers, any broker, fill in the blank. You'll be able to do that. And then within that vein, they'll start allowing historical data via the repositories like the ones I get from all the exchanges around the world. They'll make a centralized one for that too. I won't have to do stuff by hand anymore, and it will be a beautiful thing. I'll be able to add new cryptos just as easy as I add stocks. So that's coming. It is coming. You better believe it. And the data will be right there along with it. So I'm just saying, I told you it wasn't going to be long before they did this. I told you. Now, here's their answer to the employment crises worldwide. Airline pilots are learning to fly drones amid the mass carrier layoffs. That's right. Delta Airlines is expected to furlough almost 1,950 pilots in October as the industry struggles to recover from the lockdowns. Some pilots, not necessarily ones from Delta, who see the writing on the wall, are mulling over the idea of an occupation switch. What does that mean? CNN spoke with airline pilot Michelle Bishop, who is anticipating pilots like herself will be laid off in the coming months, and she's explored other options. She says that I'm just trying to fly as much as I can while I can because I love it. Bishop said, who has been an airline pilot for 2 decades, is now considering becoming a drone pilot. Bishop, along with 2,000 other pilots and 1,500 members of the general public, have signed up to become drone pilots for Connecticut-based startup Aquiline Drones, or AD. Think of Aquiline as the Uber or Lyft for drone pilots. Customers log into an Aquiline smartphone app for drone services. The app matches the customer with the closest pilot to conduct a wide array of services, including aerial footage for weddings, real estate listings, and property survey. Bishop, including thousands of other pilots and non-pilots, will start Aquiline licensing program called Flight to the Future on September the 1st. Airline pilots receive a cheaper rate for the Aquiline licensing program than non-pilots. The program is a 6 to 8 week virtual course that will train folks in becoming drone pilots and familiarize themselves with Aquiline's back systems. All right, because they have their own back-end systems. Once the students pass the Aquiline course and the Federal Aviation Administration's test, the FAA got to be involved. Each drone pilot will be given an LLC, an option to finance a $4,000 drone, and insurance. You knew the FAA was going to be in there, and it's that test. There's a test. So you got to pass their course, and you got to take a test with the FAA. Pilots are expected to earn a minimum of $300 per job at a $150 per hour rate, CNN said. The business model comes straight from the ride-sharing business playbook, and it's a model that's held by big gig economic proponents as one of the offers. They offer flexible hours and a be-your-own-boss environment. But it's also a model that comes with some drawbacks for workers. Independent contractors are not guaranteed affordable health insurance, paid time off, or any other benefits offered to full-time workers. Again, their model is more entrepreneurial. Now, Bishop plans to start classes next week, though she said she'll be interested in becoming a realtor as well. If I were her, I would stick with the drone program. With the travel and tourism industry busted, the airline industry is in collapse, and carriers grounding fleets for the next couple of years, where airline pilots like Bishop, who are slated to be furloughed, transition to become drone pilots. It is a logical leap, so I'm going to have to say absolutely. Yeah, I can see that happening. It's a logical step. You're used to flying. Why not? Why not? That's what you do. You fly. So yeah, I can see that happening. I can see that coming. I can definitely see that coming. The other thing is, what is everyone else going to do? And if that's not enough, then you got the USPS filing for patents for blockchain-based secure voting systems. We'll see how that goes. Again, blockchain, yeah. But see, the corruption is not coming from the outside. It never has when it comes to voting machines. The corruption is on the inside. You can create the most secure blockchain on the planet. But if you've also built a back door to it, well, then corruption can walk right in. Well, no, the back door is really for the government. Yeah. Oh, so the government has no corruption? Or is that what you're saying? There's never been corruption in the government? Really? Think again. Wrong answer. So if Powell announces that average inflation targeting today, that means interest rates will be on hold for the next 42 years. In other words, they can never raise interest rates because if they do, they will blow up the economy even worse than it already is. Absolutely incredible that we're living in these times. It's really hard to really ascertain what is really going on. Is this really true? Is this truth? Is there truth here? Is there truth? Well, according to Wells Fargo, the gold bull run signals growing lack of trust in the monetary system. It's easier to understand gold's record breaking move up if you look at it from the other side of the equation. The dollar is now at its all time low compared to gold. That is not true. The dollar's not at its all time low. If it was at its all time low, it'll be sub 77. We're at 92. So that part is not true. Not true. I know what they're talking about, the indexing because of the price of gold versus what the current price of the dollar is, but it's not, the dollar's not at its worst, because that makes it sound as if the dollar's at its lowest point. It's not. It's just that gold has increased in value. I mean, it didn't matter. Gold was already a million times more than the fiat dollar anyway, because the dollar's lost 95% of its purchasing power while gold has not. All right, so this isn't a narrative you don't typically hear on the mainstream financial networks, but there seems to be a growing awareness that the dollar and the system based on it might be in trouble. You think? We've seen Warren Buffett make a bet on gold, and Goldman Sachs recently warned that the dollar could be in danger of losing its reserve status. Now, Wells Fargo has weighed in, warning in a report that the bull run in gold signals growing lack of trust in the world's monetary system. Wells Fargo, ahead of a real asset strategy, John LaForge, penned the report, noting that gold has been on a strong 3-year run, with the price up about 35% in 2020 alone. He outlined 3 primary reasons gold has gone up. The first one is a low real long-term interest rate. And second, excessive global money printing, quantitative easing. And third, a weakening US dollar, which is true. LaForge goes on to offer a fourth meta reason for gold's bull run that he called the elephant in the room. It's called trust in money. Over the very long term, it's been a fickle thing. No paper money has survived time, while gold is history, trusted store of value. The force isn't ready to perform a last rites on the dollar-based monetary system just yet, though he wrote that it is working today and is largely trusted. But he does think that trust is beginning to fray around the edges. The recent rise in gold prices and cryptocurrencies may be a sign that a small but growing contingent is questioning the world's monetary system. They've been doing that for a long time. LaForge argues that trust is the pillar of any monetary system. When that trust breaks down, the entire system can collapse. When that happens, then what? People will revert to something proven to be trustworthy, and that's what's been trusted as money throughout history. No brainer, gold. All right, so yeah, rising gold price means lack of trust in the monetary system. Rising gold price also equals store of value, flight to quality, fear gauge going up. I think the increase in gold prices is almost sort of like a barometer on what is really good, because gold is a store of value, gold is money, and at the end of the day, it's tangible and it's physical and it's limited. US dollars they may be tangible, you can hold them in your hand, but they are not limited. They are unlimited, and that's a big deal. So with that being said, folks, I mean, come on, Wells Fargo is warning you too. Yeah, and I've told you guys in the past. Wells Fargo has had some of the best economists than any other bank I've ever seen. So where does this lead us to? Let's talk about it. Well, people have been talking about reset for the longest time, and the great decoupling is here. The U.S. now has plan a plan. They got a plan. They always got a plan to purge Chinese tech companies fully from the America's internet, creating what the Trump administration has dubbed the Clean Network. It mirrors the White House's existing 5G Clean Path initiative to remove all Chinese components from systems everywhere, and which now extends it to everything tech on the net. Now, China fears a financial iron curtain is about to fall, a complete explosion from the dollar sphere. In fact, soft capital control is already birthing, with Bloomberg reporting that the U.S. is now asking colleagues in universities to divest from Chinese holdings in their endowments, warning schools in a letter this last week to get ahead of potentially more onerous measures coming on those holding the shares. Reportedly, the Chinese leadership annual budget retreat agreed, should the recommendations be subsequently endorsed at the Central Committee in October, that China should prepare for war, build food and energy reserves, establish the Euro-Asian Continental Economic System, recover its overseas gold, and broaden the global RMB settlement system, including its digital yuan, and prepare for the complete interruption of relations with the U.S. Like Gerald Celente always said, after they take everything you got, they take you to war. And that's what's going on right now. The governments of the world are preparing for World War III, kicking it off with a U.S.-China war, which sounds absolutely idiotic to me, because China practically owns the United States. Do you know how much property they own over here? In my opinion, they've been the single hand that's been propping up the U.S. housing market. So I don't get that. I don't understand that. Not at all. Not at all. But yet, while the media focus is all on this tech and sphere decoupling, something profound and quite separate is already shaping the global monetary order, quite apart from likely Chinese exclusion. It is set in the longer term to be more revolutionary and contentious than even the decoupling. It is getting sparse attention. However, as it becomes even more evident that no V-shaped economic rebound will be arriving soon, as the U.S. House catches fire again with coronavirus over the autumn and the winter, and then going further into economic close down territory, one more again, the chances are that this bombshell will indeed ignite. Earlier this month, Zero Hedge published a remarkable interview with two former Fed economists, Simon Potter, who was also the former head of the Fed's plunge protection team for many years, and Julia Coronado, both of whom have tremendous impact on thinking at the Fed. They hinted at the Fed's last-ditch stimulus and bailout strategy, i.e., should the U.S. economy be further stalled by the coronavirus, it is to wire digital money directly into American smartphone financial apps, bypassing the banking system entirely. Now, the two propose creating a monetary tool that they call recession insurance bonds, which draw on some of the advance in digital payments and wire instantly to Americans. Then, just days later, Federal Reserve Governor um, Brenner hinted once again at the coming monetary revolution. So, what would prompt the Fed to pursue this significant policy process? Well, another leg down resulting from an upsurge in COVID-19, of course. The last bailout was not just clunky, it sent stocks and bonds soaring skyward. and there's severed asset prices for any connection to metrics of value from fundamentals and from analysis, and did do not much better either for ordinary Americans. What we now have, therefore, is a market focused only on narratives and not on reality, and this has implications as well. The prospect of the Fed's printing digital dollars wired to people their cash pay apps as a new stimulus mechanism, replete with the overtones of a Davos reset formula for moving toward a digital global universal basic income model, is obvious. Did I not say that? Been saying it for the longest time. Universal basic income is coming, as it is the political temptation for politicians to pay for all sorts of political projects in this way. Yet this is only a half of the revolution. Two other components are already done. First, people can see with boomer entitlement spending about to soar into the trillions that the US government cannot support the debt. They cannot support that debt burden without having the central bank simply print more money. Many on Wall Street will see this as the solution. Putting digital money directly onto apps must be inflationary, they believe, and inflation can melt away America's debt load through debasing the currency. Second, in April, the Fed already changed the supplemental leverage ratios to exempt U.S. Treasuries from capital ratio requirements. In simple English, this means that commercial banks can buy any amount of U.S. government debt instruments without putting aside capital on their balance sheet to support such purchases. So that as long as rates are even marginally positive, they can buy and enjoy a normal income. Now, in June of this year, U.S. banks increased their U.S. Treasuries by 48%. Effectively, the Fed facilitates the credit creation. The banks use it to buy treasuries, and the government then spends the money. Magic, right? Like the Mad Hatter's Tea Party, out of thin air, things appear. Not once, but twice, as a similar trick was done by the Fed via multiplying the value of treasury bailouts by providing credit on a 10-to-1 basis to the Treasury special purpose vehicle. The Fed says this is not direct spending, which would be illegal. All right, so let's break this down. First, America has already started down the path towards a nationalized, centrally managed economy like China's. The Treasury and BlackRock hedge fund, who manage the congressional bailouts distribution on behalf of the Treasury, now make the economic life or death decisions for U.S. businesses from the very big down to the very small. Remember, we talked about the Treasury being an agent of the Fed. Now you're seeing that talked about again. Now, this is a great reset. And like most temporary measures, it is likely here to stay. Whenever the government says something's temporary, it really means it's permanent. All right? Don't ask me why. It just is. It's just one of those things. It's just what they do. It's what they do. All right? So if you look at this, you got a private company working with another private company making life and death decisions about the U.S. economy. But I thought that was the government's job. The Fed, which we call the Federal Reserve, is not government. It's a private corporation. BlackRock is a hedge fund, a private corporation. It is not the government. The Department of Treasury might as well not even be called the Department of Treasury because it doesn't do anything. It doesn't print its own money. It lets a private corporation print the money, which has a piece of debt attached to every dollar bill coming off that machine. What do we call the merger? of corporate and government. What is that term? Fascism. All right, fascism. That is what this is. All right. What's not to like from the U.S. president's point of view? He controls money issuance now that the Treasury and Fed effectively are fused together and can steer the U.S. economy in a national interest directing during its tech war with China and Europe. Free markets, they do not exist in America at this point. Secondly, the financial war is already underway, and China will likely use its CIPS financial clearing systems and central bank initiated digital yuan already in use to circumvent SWIFT and the USD. Except this will mean others being paid in a non-fungible digital currency that can only be recirculated back to China for its goods, or maybe not. Like China's Shanghai oil futures market, foreign sellers may be given the option to hold their sale proceeds either in Chinese debt instruments or to exit their yuan via the physical gold market. But apart from the US and China, Russia, Italy, Iran, and the UK are amongst others planning their own CBDCs. Are we moving then in an era of enhanced financial war towards multiple non or quasi fungible digitalized means of payment as the new normal? Well, third, the world again is demanding gold in exchange for US dollars. And the Fed's primary dealer, some of which operates a bullion bank, seems unable to comply. But with the advent of the coronavirus, the U.S. financial system has been forced to lower real interest rates down into negative territory, causing gold to look more attractive than holding devaluing U.S. treasuries. Now, traditionally, the Fed controls the gold market to prevent gold from effectively competing with or displacing the US dollar as the primordial monetary instrument. But someone or some entity somewhere is now battling the US central bank for that control. All right, so here it is in black and white. They've been controlling, manipulating the gold market so that it cannot compete with the dollar. Now, in short, the Fed's manipulation process presently is failing. And unless the Fed can suppress the price of gold and regain control, we may see an escalating downward spiral in the value of the dollar vis-a-vis gold. Now, finally, we come to the crux in all this, okay? Here we go. In outlining the monetary revolution taking place in the U.S., there is much in it for Wall Street. Davos contingents to like the move from traditional money into digital. Central banks issuing digital money through the Davos crowd will prefer that this be done by a global authority. The end of cash and the system control and transparency that digitization would allow, some of this, such as the political instruments of smartphone apps, have been given a push by the coronavirus. But the U.S. establishment is deeply split. Yes, there's a powerful Wall Street globalist component who support Davos, but others in the deep state, including some amongst the neocons, would rather die in a ditch than see U.S. dollar hegemony lost amidst the undoubted present economic recession, which is really technically a depression. These tend to be the Trump supporters. All right, so the U.S. asset markets are presently unhinged from all fundamentals. All right, Wall Street is divorced from Main Street, and it is ruled by a don't fight the narrative and existential fear of potentially missing out. In other words, the unanchored stock market highs on which Trump's reelection hopes are pinned are highly vulnerable. Sentiment can shift in the flash of an eyelid from an adrenaline-fueled fight mode to flight mode. All that is needed is a changed narrative. And what narrative might that be? Well, the sage of Omaha, Warren Buffett, this week dropped a very unexpected narrative. Not known as a gold bug, he was shown to have dumped stocks and bought gold and gold mining stocks. That's right. So, who next for sparking the October market sell-off as the dollar continues to spiral downwards and interest rates edge upwards? Mr. Soros may be smiling. Remember, you guys, these big dudes, they talk down the truth while circumventing all of that and doing the opposite of what they're saying. That's what's up. That's how they get down. All right. So there is a quiet American reset happening, technically speaking. Now, I know what you're going to say. I know what you're going to think. I know. But here's something you do not know. Are you ready? Some people think that we're back into the Great Depression of the 1930s, and that technically speaking, while we have one leg in the 1930s, we got another leg in the roaring go-go 1920s. But here's why this isn't 1920. All right? Why this isn't 1920 has everything to do with starting valuations and future returns. While generally we live in interesting, though not unprecedented times, the roaring 1920s could be a precedent for the roaring 2020s. Remember I told you guys about the 100-year cycle? Remember that? It's popping up now. The good news is that the bad news during the previous precedent was followed by the roaring 20s. So far, the 2020s has started with the pandemic, but there are plenty of years left for the prosperous 1920s to become a precedent for the current decade. Again, 100-year cycle. The 1920s ended with a stock market melt up followed by a meltdown. The 2020s may also be seeing a melt up, which began on March the 23rd. Now, you can make an argument that 1920 was the bottom. Yes, the 20s marked the start of a period of marvel and rapid change. 1920 also marked the end of 20 years of economic destruction. A series of events rocked the turn of the 20th century, which deeply suppressed financial markets. All right. So imagine 20 years with negative total real returns. We had the panic of 1907. We had the recession in 1910 and 1911. We had recession in 1913 and 1914. We had World War I, which ran from 1914 to 1918. Then you had the economic depression in 1920 to 1921. Now, the market melt-up was undoubtedly driven by an economic recovery, a surge in innovation, etc., but was supported by historically low valuations. Now, if you take a look at companies today and how they're spending a tremendous amount of money on technology and innovation, this is a significant difference. The innovations in the early 1900s put increasing numbers of people to work. All right, the assembly lines, remember? Now, those increases in jobs led to higher wages and more robust economic growth. Today's companies are spending money on innovation and technology to increase productivity and reduce employment and suppress wage pressures. All right. Now, the history of the economic and related events in the past shows the difference between then and now. Notice the strong economic growth rates in the 1920 through 1940 period as compared to today. All right. The primary point is that history suggests a massive melt-up is coming for the financial markets. There are challenges to this view based on what history tells us about valuations and forward returns, but this is not your great-granddaddy stock market. Valuations don't matter. In the short term, a period of 1 year or less, political, fundamental, and economic data has very little influence over the market. Such is especially the case in a late-stage bull market advance where the momentum chases has exceeded the grasp of risk undertaken by investors. In other words, in the very short term, price is the only thing that matters. I would go further to say price is the only thing that matters, period. Long, short, intermediate, doesn't matter what the term is. Price is all that matters, period. Price measures the current psychology of the herd and is the clearest representation of the behavioral dynamics of the living organism we call the market. And I will take it a step further and say that everything that is known or can be known is already priced into the markets. You like to hear, you hear people, the talking heads commonly say, oh, this and that is not priced into the market. And I beg to differ. That is not the case. That is not the case. Things are priced in already. But in the long term, fundamentals are the only thing that matters to most people. All right. They look at like the 10-year and 20-year forward total real returns to the margin adjusted CAPE ratio. And that would usually suggest that forward returns over the next 1 to 2 decades will be somewhere between 2 to 3%. Because PEs don't matter anymore because of central bank interventions, accounting gimmicks and shenanigans, and share buybacks, etc. However, as you look a little bit deeper and take another look under the hood, the disparity between current CAPE valuations today at 31 times versus 5 times earnings in 1920 could be a real difference. There are 2 crucial things to take away from this. Number one, market returns are best when coming from periods of low valuations. And second, markets have a strong tendency to revert to their average performance over time. All right. So you got to look at both of those things because there is a argument to be made that history repeats itself. Patterns tend to repeat themselves, right? But in this 100-year cycle, we do have a lot of different variations because we're living in different times. So I don't know. Now, as I see your question in the live chat, I don't know if the Fed crypto will inflate the value of other cryptocurrencies because, again, this is territory we've not been in before. We have not been here. There was no crypto market 100 years ago. All right, where the Fed came in and said, we're going to do our own thing to compete with a decentralized program. We're going to have a centralized program. I knew that was coming. I warned you all that that was coming, and it came. But now the question is, where do we go from here? No one knows the answer to that question right now. Anyone who claims that they know the answer to that question is lying because we've never been here before. We have never been here before. We have never been here before. Cryptocurrencies is a new thing. It did not exist 100 years ago. All right, it just didn't. So you can't really use that argument. We don't know. It's like we don't know what we don't know. That's where we are with this. We actually technically do not know what we do not know. And until we can see what's going to transpire, we just have no way to gauge this. There's no way to gauge and kind of ascertain what's really going on. I just don't know. I think at the end of the day, after the dust settles, people will, if not encouraged to do so, people will automatically just gravitate toward it. Remember, the government holds all the keys to the kingdom. They have all the power. They can make it so attractive that people would rather go to the centralized exchange than the non-centralized exchange. Okay. So look at the benefit. They're going to give you, I know they're going to give you tax benefits. That's already a gimme. They're going to tax you in a certain way with it. They're going to make it so that if, easier for access. Their biggest selling point will be security. That's going to be their biggest selling point. Because right now with the decentralized exchanges, you're kind of rolling the dice. you're kind of hoping that you won't get ripped off. That some Russian hacker won't attack the exchange and steal everybody's crypto. There have been just numerous cases in the news over the past several years of that happening. There have been exchanges that have gone the way of the dodo bird. So now that the government is taking over and they're going to build it out and make it part of the New York Stock Exchange, the COMEX, all of that, Mercantile Exchange, whatever, that's going to give it that added value of security or perceived value of security. Hey, you're safe here. You're secure here. You can come here. We're going to take care of you here. Have no worries over here. And let's be honest, a person that just wants to trade and make money, do you think they're going to risk ABC exchange, or you think they're going to go to the NASDAQ? They're going to go to the NASDAQ because they know what they're getting and they know their money is quote unquote safe. You can't say that for ABC exchange. All right, you can't say that. So eventually, I think that those decentralized exchanges will still exist, but they're probably going to lose a lot of liquidity and a lot of volume and open interest. So it's not going to be as attractive. People are not loyal to exchanges. They're loyal to their money. And if the money is on the handwritings on the wall, if you see the government's coin traded on the NASDAQ rallying like Bitcoin was, except for if you see the government's crypto go to $20,000 a coin and then rally to 40,000 while Bitcoin is struggling at 1,200, which one are you going to trade? See what I'm saying? So they don't have to really do anything. Just build it out, and they will come. Build it and people will come. But they're gonna be like, yo, man, that market is moving up in there. I just traded that last week, man. I made a ton of money. People are gonna want to keep making that money. So they're gonna go where they can make that money. All right. So if Ethereum ain't moving right, well, guess what? I'm gonna go trade over there at that NASDAQ where they got 5 or 10 different coins that are moving. And I'm gonna tell you what's gonna end up happening. Now, this is probably 10 years down the road, but you're going to want to take notice of this. I believe when the dust is all settled, all the top cryptos will be traded at the new government exchanges. All right? You'll be able to trade Ethereum and Litecoin and everything there. And I'm going to tell you how it's going to end. It's going to go out with a whimper. It ain't going to be too much noise. People are going to notice something. Ethereum traded on whatever exchange people use today ain't moving. But Ethereum traded over there on the NASDAQ is booming. What am I going to do? I'm going to trade Ethereum on the booming platform, not the one where Ethereum is not moving. So there will be huge disparities in price action. All right? Where there would traditionally be where traditionally that will result in an arbitrage opportunity, people are going to say, nah, forget it. And they're just going to gravitate to that NASDAQ. You know what I'm saying? Oh, I can trade Litecoin on the New York Stock Exchange. Let me go ahead and do that real quick. And you're going to see that, the top altcoins moving real good and people are going to love it. Now, you're not going to have the 3,000 coins like you got now. They're gonna whittle that down. They're gonna make it so that you have to meet certain requirements for your crypto to even be traded on their exchange. Because remember, everything is gonna be just like it is now. SEC is gonna be over it, and everybody's gonna be over it. So you just won't be able to just create a coin and say, okay, my coins trade on the NASDAQ. Nope. You're gonna have to meet the certain requirements. So a lot of coins are gonna die because they don't meet those requirements. All right. And they'll be considered a sham, and people will gravitate out of them and go to the centralized exchange. It's not going to be anymore, but this is freedom from the central bank. This is for the people, by the people, other people, for the people. A lot of people will say, yeah, that sounds good. Say, yeah, that was all good and fun while it lasted. But I'm going over to this NASDAQ because I got bills. See what I'm saying? So people will gravitate. You will be able to trade the top altcoins at the major U.S. exchanges that they're building and preparing specifically for that. And they're building out their own system, just like commodities have their own exchanges, equities have their own exchanges, forex have their own. Well, guess what? Crypto is going to have its own platform as well, except for you'll be able to access and trade all of those through your brokerage. Just like now with TD Ameritrade, Thinkorswim platform, you can trade currencies, you can trade stocks, you can trade futures, no problem. The next thing on the item that will come up is now you can trade cryptos with us. Who's not going to want to trade cryptos? Of course you're going to want to trade cryptos. So that's how that's going to be, folks. This is coming. I see that happening within the next 10 years. It could even be sooner. But you know how the government is. It's very slow to do stuff. So I'll give it 10 years. Within the next 10 years, you'll see that. People won't be trading at ABC firm over the internet anymore. They'll be trading with a real broker, and they'll be able to access those things and trade those things. So yeah, it's coming. It is coming, ladies and gentlemen. So prepare yourself. Prepare yourself to engage in this new economy because it is here to stay and it's not going anywhere. It's not going anywhere. All right. All right. So that's about it, man. I think today, like I said, we got this stuff going on. Jackson Hole still coming on, and whatever comes out will come out, and it could move markets, and we'll see what happens, man. We'll see what happens. I don't know. I just don't know. We'll just have to see what happens. All right, with that being said, come on over here to PulseWaveTrading.com. You know what it is. You know how we do. You know how we move. PulseWaveTrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Peace.